Hey everybody, it's me, Gregory Mannarino. How are you today? It's Friday, August 31st, 2018. Alright people, like I explained to you yesterday, this issue, it's now not an issue, it's a crisis. There is a currency crisis, and please do your own research about this. Don't take my word for a damn thing that I say. It's getting worse. We have all kinds of desperate measures being put in place to prop up this currency crisis that is unfolding. Now, I covered a lot of this yesterday, and I explained to you that we were going to see a few things happen. The knee-jerk into the dollar was going to continue. Well, that is going on right now. Dollar is stronger. I also explained to you, you were going to see cash rush into the bond market. Well, I don't want your eyeballs to explode. That's the truth, but there is a link in the description of this video which will take you to my website. Right side of the page under the chat room is the bond market chart. You can see this for yourself, a massive amount of cash flowing into the debt market. Think about this. I mean, these are desperate acts in my view. And some of this, no doubt, is being used to keep our stock market propped up, but it's the mechanism here. So, you know, again, as I am doing this video blog, the NASDAQ is higher, S&P 500 is flat, the Dow Jones Industrial Average is down fractionally. A lot of effort is going to go into keeping our market propped up at this point here, but it's not the stock market that we need to be looking at. You all know that. I've been explaining to you since forever that you got to look at the bond market. It's the debt market that dictates everything now. Currencies are part of debt. They are units of debt, people. So this issue, which is now a crisis, has the potential to get much worse. We're going to start to see even more desperate acts by these governments to try to prop up their currencies, and more than likely they're going to need bailouts from who knows who. Could be from you. But to keep this scheme going, it's going to need a lot more capital, central bank intervention here, which is going to, again, strengthen the central bank's position because their product is debt. You all know that. Look, every single world leader right now, all of them, including our president, I know a lot of you get offended every time I mention our president and what's going on here, but it's the truth, is doing the same things right now, supporting their central banks, having their central banks keep their foot to the floor to keep the illusion going. But again, we all understand there's going to be a point here where things are going to get ugly now. Just let me touch on this. Look at the banking sector right now here in the United States. As a matter of fact, let's go look over at Germany first. The German banks, as I am doing this, Deutsche Bank, of course you know that one especially, is under pressure. Well, it's not just Deutsche Bank. Bank of America, Citigroup, Morgan Stanley, Goldman Sachs, JP Morgan, all of them are under pressure right now. Now, why would that be? Maybe because of the currency crisis that we're seeing here? Yeah, that's exactly what's going on. But again, people are going to be distracted by everything that they can be distracted by. More rhetoric, more nonsense, more divisiveness. Look here, don't look here. Understand, the mainstream media channels, and I don't know how many of you watch them, they're not real. Everything that they put out there, these conflicts that they create in people's minds is a distraction. Both these parties, you know that, are two heads of the same snake, and they're not working for your benefit. Period. It never works out like that. We always get the short end of the stick. I'm talking about the middle class. You have to understand, look, the people at the lower end of the spectrum, they're broke. They got no cash. They have basically no say-so in anything, and they cannot be sucked dry. The middle class, because they've already been sucked dry, the middle class has the bulk of the whatever wealth is not left in the 1%, but they want it. The 1% want it. And they're going to get it. They always do. I mean, seriously, it's the same story throughout history, and that's what's going on here. It's a sad state of affairs. All right, look, before I go off the deep end any further here, the entire financial sector here in the United States and overseas is under pressure right now. It's because of this currency crisis. It's a debt crisis. Understand, currency, fiat currencies, these are units of debt, like I've been explaining forever. So we need to keep our eye on this. We're going to watch some very desperate things go on. I don't know if they're going to be able to contain it. I can promise you that efforts that we cannot even believe or think about is going to be instituted to try to stop it. But again, we've seen this before. When this is a bubble, obviously. When bubbles burst, it's very rare for them to be reinflated. However, look what happened here in the United States. The Federal Reserve was successful, no doubt about it, in reinflating a housing bubble and a stock market bubble. But look at the effort. They had to explode their balance sheet of what we're able to see, okay, because a lot of stuff there is off balance sheet, and I talked about this yesterday in the video where I went off the deep end a little bit. They had to inflate the debt beyond anybody's imagination just to prop everything back up. It's always the same thing. Anyway, we'll cover more of this later at the market wrap up, and it's going to be lovely. See you then.